Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Shreve here with a look at the action for Thursday, July 13th, where we saw the bulls running. Ken.
Yes, indeed. Another big drop in that 10-year Treasury yield. The U.S. dollar weakened, and stocks are taking off again. So another great day for the Nasdaq. We're talking on IBD Live this morning, Ali. Pretty easy to find stocks to talk about in this type of market. You come up with 20 stocks, got to narrow it down to 3. So let's give it a shot here. On Holding, ONON. Nice little breakout today. Closed a little bit off highs, but good move for that stock today. Rambus, RMBS is a big in data center chips. That stock made an interesting move today. And finally, Copa Holding. Delta Airlines earnings were in focus today. Copa, based in Panama, great earnings and sales growth, and a really well-run airline.
Okay, well, we'll take a closer look at those 3 stocks, but first, let's analyze the major indexes. The Nasdaq today up 1.6% to lead the charge. We also had the Russell up almost 1%. The S&P 500 up 0.9% today, and the Dow also in positive territory, but lagging with a gain of just 0.1% here. Tech clearly is the sector to be in right now, Ken, it seems, with the Nasdaq surpassing that round number of 14,000 with ease.
It really was with ease, and it was second straight gap up, it looks like. And anytime an index approaches a round number like 13,000 or 14,000, it can kind of get some resistance, but that just did not happen at all with the Nasdaq. But we are in a very strong confirmed uptrend here, and talking about this expanding breadth that we've seen. So going back to the daily chart here, the Nasdaq is starting to maybe get a little stretched from its 50-day moving average, about 8% or so. So we know that's getting to a point where it might starting to get overbought, but still a lot of good action out there in individual stocks.
Right. That's a good thing to point out, Ken. Before the last pullback, we did see the Nasdaq get 10% or so, maybe even a little bit more above that 50-day line, but 8% is still getting up there quite a bit. And for investors out there who have been trading this market over the last couple of months, and even with recent buys, making progress, looking at our portfolios, we might be feeling pretty good about ourselves. But I know Joe Fahmy out there tweeting, "You're not smart. The market's doing well. So, make sure to
leave it to Joe Fahmy."
I know, leave it to Joe Fahmy to get us all in check and bring us down to earth. But I think that's a good point. We can't just be so consumed with the celebrating or patting ourselves on the back. We should still be sure that we're playing this market right and not getting too risky and not just expecting that we're going to keep going up at this rate.
Yeah, I mean, we just see even when it comes to the leaderboard model portfolio that David Chung and myself manage, we've had a lot of big winners in that portfolio, and some positions are 5%, some are 10%, and we've been talking about kind of trimming some of the winners, but so many of these stocks are holding above their 10-day moving averages, their 21-day moving averages. So a big part of us just wants to give our big leaders the benefit of the doubt and at least let them test some short-term support levels here, because we really wouldn't be giving back too many gains and let stocks go through a normal pullback. So even looking at the Nasdaq here, that easy move above 14,000, a pullback down to the 10-day or 21-day, that's going to feel pretty rough. I mean, that's a 2 or 3% pullback off its high, but like you said, when the Nasdaq was 10% above its 50-day line, when it ran up close to that 13,800 level, that was a pretty shallow pullback, came right down to the 21-day line and found support. So that's a scenario that we could see again. So playing a little bit of defense here probably makes sense, but you also want to give your winners room to run because the uptrend is still very strong.
Mm-hmm. And I think it also underscores the importance of focusing on strong entries. Perhaps the tendency in a strong market is to relax the rules a little bit and start chasing the strength, because we've seen a lot of momentum and strength leading to more strength. But at some point, if you are chasing stocks, you could get caught in a nasty shakeout, and no one wants that. We want to get in with those strong entries to be able to withstand normal pullbacks.
Yeah, exactly, and that's what we strive to do with Leaderboard, and a lot of us that manage our own portfolios. Just getting those good entry points. Have seen just numerous breakouts over trend lines today, and Rambus is a good example that we'll talk about. But in this type of environment now, we're actually seeing base breakouts. Stocks that are actually breaking out of these sideways consolidation periods, that breakouts that are actually working, and then we're seeing follow-on buying the next day, and sometimes even the next day. So that tends to happen in a strong market, and it's been good to see.
Yes, definitely good to see that strength underneath the surface in addition to on the index level. A couple more index charts though that we want to take a look at. Here's a look at the S&P 500, also clearing a round number today of its own at 4,500, Ken.
Yeah, another excuse me, another round number, and yeah, but just back to the daily chart, it looks like the close near highs for the S&P 500. So this was a round number that you would have thought maybe the S&P would have a little bit of trouble with, but a nice move here as well. Didn't look like there was a lot of volume on the NYSE today. Last I checked, breadth was about 2.5 to 1 positive. So just seeing broad-based strength across a variety of sectors and industry groups. A couple of months ago, it was just Facebook and Apple and Microsoft. Now the leadership is really, really broad-based.
Yes, it is. And just a quick look at the weekly chart, we can see some prior resistance potentially around 45.50. So we'll have to see if it can get above that and stay above it. But looking good for now, some 4.3% above the 10-week line.
Yeah, right. And so I think the S&P is not as extended as the Nasdaq is. That probably makes sense. A lot of the Nasdaq with these big large cap technology stocks doing as well as they've done, but at 5.5% above the 50-day, yeah, maybe starting to get a little stretched. But we'll just have to again monitor the day-to-day market activity here. We're dealing with a fairly light distribution day count, so going to monitor higher volume declines when we see them. And then if we do get a sell-off in higher volume, we're going to look directly at the leading stocks of this rally, and are they still holding above short-term support levels during a sell-off? If they are, then we still have to give the market the benefit of the doubt. But if we see kind of repeated signs of institutional selling in some of these market leaders, that would definitely be a time to start to raise some cash.
Yes. And here's a look at the Dow DIA, also participating today, but just a little bit, and looking like that 34,500 or so on the index level is posing a little bit of resistance, but still setting up for a potential breakout out of this long base.
Yeah, you had kind of not a great session yesterday. It was a decent gain and pretty good volume, but it closed near its session low, and it kind of showed similar action today. Couldn't hold on to those early gains and closed 1/10% higher. So yeah, but it is bumping up against some key resistance levels, and these blue chip stocks maybe they'll start to break out. We have J.P. Morgan earnings tomorrow morning, Dow stocks. So thinking we could see pretty good numbers from them, even though CEO Jamie Dimon has been a little cautious on this economy. Maybe he's going to change his tune a little bit. We'll have to see.
Yeah, we will. And here's a look at IWM, small caps continuing to extend gains after a breakout earlier this week.
Yeah, looks great. That 189 pivot just took out the 190 level pretty easily. Decent volume yesterday, light volume today. Small caps looking pretty good as well.
And you mentioned the dollar and the 10-year yield. So look at this here, Ken. The dollar coming off again today for losing streak now of 1, 2, 3, 4, 5 or 6 days now, and at a pretty quick clip this descent.
As the dollar falls, the market rises, and that's pretty typical. And then when you have that weak dollar, it tends to show up in the weak 10-year Treasury yield as well. They tend to move in tandem. But I'll tell you, when that 10-year yield jumped over that 4% level. Again, that's when the market was, maybe thinking there would be two more rate hikes by the Fed before the end of the year. Now that story really seems to be fading, and you see that 10-year yield really backing off highs. Right now, the market is expecting just one more rate hike at the end of this month, and maybe stand pat until the end of the year. So still a lot of data between now and then. But again, as we've been saying, Ali, the market is growing more confident about a soft landing for the economy.
Yes. And now let's take a look at some individual movers. Here is ONON in the shoe group, finished with a gain of 3% and above average turnover, right around a handle entry. So closing off highs, but that doesn't mean we should count this stock out.
No, not at all. I mean, it was disappointing to see it close in the bottom half of its range on a good up day for the Nasdaq. Now, granted, this does trade on the NYSE, but there was some higher volume today, so some sellers in the stock as it broke out over the latest buy point. But listen, we're going to watch how the stock behaves tomorrow. I'm not overly concerned that sellers knock the stock off highs by the close. This is still a high quality company with great fundamentals, and again, we'll just kind of watch how it trades to conclude the week, and hopefully it'll regather some steam tomorrow.
And next, we want to take a look at RMBS. This is Rambus in the chip sector with a trend line entry here today, Ken, after going tight for a couple of sessions in some light volume.
Yeah, really, really clean, and just this week and maybe towards the end of last week, you noted those really, really tight closes near the $60 level. So that's a way that a stock shows support as it's consolidating. Several tight closes in a row, and then a nice heavy volume move today. So technically, this stock looks good. You see a big annual earnings estimate for Rambus next year. They are very heavy, like Nvidia, in data center chips, so they're well positioned for growth. And you can see the top line and bottom line growth at the bottom has been slowing down a little bit, but again, I expecting growth to really ramp up hard next year. So on the weekly chart, a couple things to note here. It is what we would call a later stage consolidation. So this is probably a third stage pattern. So in other words, it's made a good run already from the 30 level. It's doubled basically from there. So still a decent technical setup. So it's getting support at the 10-week moving average here. I thought there was an early entry today. We'll see if the base can complete, and Rambus maybe might try to break out of this period of sideways movement.
Sounds like a plan. And we want to take a look at CPA. We've seen such strength in airline stocks. So here's a look at one making a nice move today with Copa up 6.4%. Strong volume behind today's move. And it also looks actionable with the action, Ken.
Yes, it does. It's a similar kind of move to Rambus, just a good higher volume gain breaking out over a trend line. It's just got pretty much a flat basis forming here. So you have that 114.48 pivot to watch. It is, it closed right at the pivot, didn't it? Look at that, 114.48, trading a little bit higher in after hours. So this could be a legitimate breakout tomorrow. But again, I thought today was a good day for the stock. And again, with Delta Airlines earnings in focus. A lot of people say, how on earth could this stock reverse lower after such a good earnings report? And again, it's a stock that has rallied huge headed into the report. So it's classic, sell the news. You go back to a chart like CPA. This is still kind of in the, broke out over the 100 level, sideways consolidation. We look at the weekly chart here. This one still could be in the early stages of a nice move here. So weekly chart shows a great technical picture. If it can stay below this 114.48, you'd officially have a flat base in place by the end of tomorrow. But you could also just look at it as a nice test of the 10-week moving average. So either way, the stock looks actionable here.
Exactly. A nice upside reversal, outside week taking shape here after a couple of weeks going tight. So
good bullish RS line, just kind of just sideways, right up near highs. And look at the fundamentals here at Copa Holdings. You know, not a small company by any means, $4.5 billion market cap. So, you know, kind of small cap, maybe close to mid cap, but the top line and bottom line growth, very, very impressive.
yes, it is. Well, thanks so much, Ken. And thanks everyone for tuning in. We will be back with more tomorrow morning on IEBD Live, and we hope you join us. It is Friday, so we will be joined by a special guest, and that guest is Dan Fitzpatrick of StockMarketMentor.com. It'll be great to have him on the show to get his take on overall conditions, stocks he's watching, and a lot of great trading tips, I'm sure. So head to investors.com/IB Live for all the details on that. We'll see you there, and we'll also see you right back here tomorrow at the close to wrap up the week.